Hello, everybody, and welcome back to another episode of the Big Bros podcast. If it is your first time joining, welcome. My name is Ilan, and I'm joined by my lovely friend and co-host, Jeremy. But more importantly, today we are joined by Adir Shiffman, who is an Australian entrepreneur, investor, and former doctor whose career has spanned medicine, startups, tech, and elite sport. After leaving medicine, he built a career across startups, investing, and technology before becoming the executive chairman of Catapult Sports and helping shape it into a major global sports tech company. Adir also co-hosts the Contrarians podcast alongside Adam Schwab, where they challenge conventional business narratives and offer a sharper look at startups, markets, investing, and corporate Australia. Adir, thanks for coming on the show.
That's a nice intro. You have to say only listen to their podcast after you've listened to our podcast each week, so you don't want to lose listeners to us. I'm always worried about that. Whenever I go on the podcast, I'm like, let's share audiences, but keep listening to this podcast. It's great.
100%. No, it's a mutually beneficial experiment here. First question though, what is, as per your podcast name that you do, what is your most contrarian take on what young Australians should be doing with their careers, money, and ambition right now?
Well, I think young Australians are much smarter about their lives than maybe previous generations or my generation of Australians, because when we were in our 20s, predominantly we were just trying to work like absolute dogs and get ahead and just bleed, and that was really the mentality. And I think no one thought about how they felt or emotions or like self-awareness, and so people in their 20s are much more on that side of things. Maybe too much, maybe it's past the point where it's beneficial, and now there's too much kind of sitting in a dark room thinking about how you're feeling and like the meaning of life. But I think it's hard to be super contrarian about that generation. Maybe this is what I'd say. Lots of people in their 20s approach me and they talk to me, they ask me for advice about career, and they're very fixated on how do they make money as quickly as they possibly can.
That's the problem, as quickly as they possibly can, isn't it?
And because, there's a whole lot of obstacles to feeling like you can earn wealth over time in Australia. I mean, it's a Western world problem, but property is largely unavailable to people in their 20s, and it gets, every year it's more out of reach because the price rises faster than wages. And like the stock market, you can invest in the stock market, but like it feels hard to make money, right? And things are definitely, it's been a high inflationary environment. People feel poorer than they did a year ago, 2 years ago, 5 years ago. And so there's a lot of people that want to make money quickly. I think that's why crypto has become so popular. And these things like Polymarket, where you can go and just effectively bet on anything and get fleeced by people that have inside information. And so I think and sports betting, gambling has risen. I think it's all because people feel, how do I make money? It's so hard to make money. Like, look at all these rich people around me, and like kind of Insta, etc., amplifies the feeling that everyone's got money. And my contrarian view to them, which you may not find contrarian, is I just say 20s is for learning, 30s and beyond is for earning. That's how you should think about life, and really use your 20s to try and learn as much about as many different things as you can. Be curious, learn about yourself. There's lots of things about you that give you advantages in life, and there's lots of things about you that make life harder for you. Learn how to deal with those things, and I feel like that's my fairly consistent, boring advice to people, but that is what I wish I would have done more in my 20s.
You mentioned that in your 20s and in your generation, as you said, it was very much a workaholic type of mentality. It's like, let's bleed work. We're not going to sit in that dark room and ruminate. We're going to work. So do you feel like that advice that you've just given now is almost the contrary to what you grew up doing, and why?
I think what people in my generation did is worked without thinking, because there was this kind of feeling of deep insecurity of just needing to be like, people looked up to type A personality. So if you look through 2000s, let's say the 2000s, when I was in my 20s, that period was just a period where if you slept 4 hours a night, you were the hero. If you basically worked nonstop, you were the hero. And so that was the attitude, and people didn't really question it. They kind of had no choice but to embrace it, or else that's the losers of culture, right? And I feel like hard work is still table stakes for success. Like again, I just keep coming back to criticizing social media. When you when you look on social media, it looks like people are taking it easy and flying on private jets and money is just rolling in. And like there are a few people that, I don't know, are content creators and can make a great living by doing that type of thing. But mostly it's lies. I mean, these people are all lying. Fundamentally, getting ahead requires working harder than the next person. If you're smarter, that gives you another advantage. But if you're smarter than the next person and they work harder, you lose to that next person generally. And when people say, I don't know if you've heard this saying, it's very cliche. People say, work smarter, not harder. You hear that rubbish? So that's rubbish. Like, okay, work harder, work as hard as you can without damaging your mental health and giving up on other important things in life. Work as hard as you possibly can. And while you're working as hard as you possibly can, do it in the smartest way possible. I think the advice of working hard is timeless advice, but think harder about what you're doing and think harder about how much money and making money is really going to contribute to your happiness, because there is a curve, if you imagine like an inverted U shape. So if you plot happiness against money, so when you're poor and living in poverty, it's very low happiness, can't eat, no shelter, not enjoyable. And then you start going up, the happiness goes up, but then you reach this point at the top where the more money you make, the happiness starts going down. I know it's kind of, people find it hard to believe. When I was in my 20s, I certainly would not have believed that. But it is true for a whole variety of different reasons. And so having some money makes you much happier, but having too much money makes you sadder. And you certainly shouldn't sacrifice other things that will make you happy for the pursuit of too much money. So maybe that would be my advice on that.
Why does making too much money make you sadder?
I think there are a few reasons. One is lots of people are chasing money to solve deeper insecurities they have internally, and money is not really the solution to that problem. And so go to talk to a psychologist and solve a clinical psychologist and solve your other problems. It's also because when you reach a certain point, I'll be extreme. When you're a billionaire, when people talk about you, they talk about you and they characterize you as someone who's rich. That's the primary thing people identify with you when they speak about you. And so you become defined by the fact that you've made money. That's pretty bad. The other thing is that once you start making lots of money, people generally fall into a trap where the spending grows because they feel like, now that I'm rich, I should have expensive stuff. So I don't like material goods. I basically own no material goods. I think they are damaging to mental health. But because the things you're worried about losing or being damaged are the things that make you anxious and ruin your mental health. But I think that there's this cycle where you get richer, you buy more expensive stuff, then you have to support that lifestyle, and then you're stuck on that rat race. But above all, I think that if you're fixated on making all of this money, then how much money you have becomes too much a central part of your life. And money is a little bit sometimes easy come, easy go, especially when it's on paper. And so if a huge amount of your personal identity is linked to how rich you are, then when that goes down, you suffer this mental crisis about who you are as a person. And maybe I'm speaking from some experience of having gone through these things. Like it's not very good to base your sense of self on how much money you have, especially considering how much luck is usually involved with accumulating money.
I couldn't agree more. I think if your identity becomes fused with I have to be that rich guy, then all your spending, all your behaviors are in service of you living in congruence with that identity. And that identity ends up becoming very fragile. And we always talk about diversifying your personality stocks on this podcast, such that you don't want to just be known as the entrepreneur. You want to be also known as the father or a family member or someone with a hobby. Like you want to be known beyond just your material wealth and stocks. But moving to kind of when you moved away from medicine and went into entrepreneurship, how did you navigate the sunk costs during that period? Because, there would have been a period where it's like, okay, I might be in a respectable job, but a respectable job that I'm not even happy in. So what do you do in that situation? So
I spent most of my 20s and maybe 30s quite dumb. And so I'm going to say something that I think was quite wise.
What's dumb in your description?
Yeah.
I had very poor self-awareness and didn't understand myself at all. And I thought emotion was like a human weakness. And I'm an overly emotional person. I read a website called Did the Dog Die before I watch a movie to find out if I'm going to be able to kind of emotionally tolerate that movie. Yeah, there's that's me, okay? Like, you know that movie Inside Out? Have you ever seen that movie? Halfway through that movie,
animation.
This elephant kind of dies. I had to turn the movie off. I came back to the movie like 2 days late. But when I was in my 20s and 30s, I thought, because that was my generation, right? That's a weakness. And so I think like sunk costs should have been a big issue for me, but I had a few advantages. One was I went into medicine not really because I wanted to be a doctor. I went in there because I was altruistic and felt some idiotic sense of obligation to try and help people in the world.
Why was that idiotic?
Because I think you need to do what makes you happy and then find out how to help people in life. But you shouldn't do the thing that you're pretty sure is not the main thing you want to be doing because you feel some misguided sense of obligation to the universe, or my grandparents are Holocaust survivors, so I got to do something good in the world because they got through Auschwitz. That's a bad for mental health. And so one is I wasn't passionate about being a doctor. I do think it would be it's going to sound terrible, but surgery and cutting people and people coming into emergency, maybe in pieces, that's very exciting for me.
Oh, wow.
When people say they fainted by blood, I'm like, oh no, I'm the opposite. But also I'd done businesses in high school and coded computers, and I'd done businesses in medical school. I didn't really go to many lectures. I mostly just read textbooks. And so I'd been doing all of this and I knew that I loved it. And so all I did is in my own mind, I said, in fourth year, it was a 6-year course. In fourth year, I said, I'm pretty sure I'm not going to just go in and practice as a doctor. But if I quit, I hate quitting things.
Sure.
And also, what else am I going to do? I'm just going to waste a few years of my life with nothing to show for it. And I want to really understand the human body. So I'll finish it. And I worked for a few years. But then I said to myself, I'm just taking a hiatus. I can always go back to it. I'm taking a break.
Sure.
And I launched a business full-time with a friend of mine who's still my closest friend. He lives in Israel now. And the truth is, the business went badly because it was September 11 and the whole world collapsed. And so I did go back and I used to go to work on a Tuesday. We worked in a sub-basement, which is this magical place where no light gets in but rain gets in when it rains. So it's a unique space. And so I would go there on Tuesday. On Tuesday evening, I would go and work in a hospital overnight. And then on Wednesday, I would just go straight back to work in the morning. And you could sleep a few hours overnight, but and that's how because I couldn't pay myself from this business we were doing. And so that's how I survived it. And the truth is, I never consciously said, I'm not going back to that. I still pay my medical registration, but I just found a way to bridge and to say to myself, I'm not closing a door behind me. I'm just having a go at something else. And I'm not sure I was ever going back, but luckily it kind of went well. And I was able to stay and keep doing different things, and one thing led to another. And so that's how I didn't think about the sunk cost. My main motivation for moving was as simple as this. I just knew that when I woke up on Monday mornings, I didn't feel as good as when I woke up on Sunday mornings. And I felt like I might be able to achieve the same on both of those days. And I know when I did business, I would go and find those things. When it's a startup, maybe it's a little bit trickier, but it is, I still do like the pain of startups. And so that was my motivation. And that's how I managed this, mental overhead of sunk costs, basically.
We find that a lot of the advice that we get given in our 20s from people we've spoken to, from, like you mentioned, a lot of the bullshit we see online is just go out there and chase your passion and the rest will look after it. Just look after itself. It doesn't matter how much money you've got in your bank account. Just go out there and find yourself and chase your passion. We've come to learn by talking to people like you, and recently we spoke to a comedian, Gene Efron, on the podcast, who was also a trained clinical psychologist that then took up comedy. And
Which is so unsurprising. You talk to comedy, I love comedy more than anything, but there is no comedian that was fine. Not one, right? Not one of them. It's my mum was sick, I got teased, I was little, I've got some other trauma, and so they either go and become a psychologist or a psychiatrist or go into comedy, and he did both, right?
Exactly right. And he said that he believes the whole you should go out there and do whatever you want blindly is the worst advice that we can get in our 20s. Rather, you should have a safety net to then be able to go out and take the risk. Is that kind of what you employed as well?
Yeah, what I would say, so I'm very passionate about tennis. I'm pretty good at tennis, but should I go out and just try and become a professional tennis player and stop doing everything? That doesn't feel like good advice. And so I think if you're very passionate about something, but not good enough to make it a career and get paid well, that's called a hobby. It's good to have hobbies. Like, you should do that as a hobby. And what should you do as a job? Something you enjoy that also is going to give you a sustenance. And I think finding that balance is tricky. And so doing a startup, do a startup, because if you do a startup, that's a realistic prospect of turning into something that's going to sustain you. It's low odds, but that's a calculated risk. You can take that risk. At some point, you might want to make sure that you not end up living in a cardboard box, or if you've got a family, your kids can keep going to school. But I think there's a balance. And so people should, if people really have a dream and they are genuinely have something special or a passion, they should give it a go. But I think they should not blindly follow it indefinitely, because then you see people who are in their, late 40s and they try to be musicians and they're doing cafes on a Sunday afternoon and barely scraping a living because they won't give up the dream that one day they're going to make it big. And then someone makes it big and you hear that story and you get survivorship bias and it's like, you see, I told you I shouldn't quit, but you should have quit. Like I always say with, Mark Zuckerberg, he got an offer to sell his business for $1 billion from, I forgot who offered him the money, Yahoo or something. Mm-hmm. And that's a lot of money. And he didn't sell it, and now it's worth $1 trillion. And people say, you see, it's very smart. Had passion, conviction, didn't sell. He was an idiot. Of course he should have sold it for $1 billion. Like the possibility of it, the prospects of it going to zero were high, and the prospect of $1 trillion was close to zero because there were no $1 trillion businesses. Just because something works out well in a lotto type of situation, you got to avoid the survivorship bias on those things. And I that's a long way of me saying I completely agree, but you have to find the balance. I definitely don't think people should say, my parents said I should have a safe job and just become an accountant because it makes a good living. If you're passionate about being an accountant and you love business, go do it. But if you're passionate about, something else entirely, being a psychologist, and your parents are pressuring you to be an accountant, don't go and be an accountant. Like, that is not the way to live your life.
It's funny that you alluded to startups and becoming a founder just before, but following last night's budget, there's a number of disincentives, I would say. What's your take on the budget and the impact that's going to have on people that do want to start businesses?
Well, we talk a lot about startups, but most businesses in Australia are not technology businesses that get started. And so when changes happen to a budget, the loudest people are people in the tech community, and then they say things that sound pretty terrible. They're well-intentioned in saying this, and they're not wrong, but they say, when I sold my business, I paid $5 million of tax, and under this budget, I'd have to pay $10 million. How terrible is that? That is a bad sales pitch to the general population. That sounds like an arrogant, out-of-touch tech bro. And so I don't want to talk about that. If you're paying $5 million of tax and you're going to pay $10 million, that is a problem, and it's a structural issue with motivation on where to start the business. But there are other people with bigger problems. The bigger problem is the person who started a shop and now owns 3 shops, 3 cafes, and the cost of their equity was zero because they built it from scratch. They didn't pay anything for their shares, and they own 100%. And previously they would have sold that business for $2 million and paid $500,000 tax on it, and now they pay $1 million tax on it, and that $500,000, that makes a big difference. That's the ability for them to pay a deposit on a house and still be able to fund a lifestyle to be able to live. That's where the issue is. And so I think that if you're starting a tech startup today and it's not focused on Australia, then until the government fixes the problem they've caused, and they will fix it because I don't think they realise they caused it. These are not the smartest group of people. So they'll fix it, and they'll do some carve out for founders. But until they fix it, you should not start that tech startup in Australia, because being a tax resident of Australia will give you a tax rate that is probably now higher than any other country in the OECD, which is like 33 developed countries, including Israel, by the way. And so you should go to Singapore, for example. They'll be very nice to you, charge you low income tax and charge you no capital gains tax as a tax resident, or New Zealand, or Israel. They'll give you like nice benefits for moving to Israel and not charge you capital gains tax and be nice to you on income tax. And so I think Australia has to fix that problem for tech, but they have to fix the wider problem, which is someone that says, I'm thinking about taking a risk, because that risk I just described is, I'm gung-ho to do a tech startup because it's cool. So they're not going to not do it. They're going to do it. Where are they going to do it? So they shouldn't do it in Australia now. But then there are people that say, I'm working in a cafe, I want to start my own cafe. That's good. That's job creation and economic growth. That's the engine room of the economy. And so should I take that risk? I'm not a high income earner, but I'm going to take that risk. And this is I'll just tell you this problem in like 30 seconds in very simple terms. That person maybe earns $80,000 a year at most. And they're going to start their own cafe. They have to borrow money. It's a big risk. It might go broke. And while they're running it, they probably make even less than $80,000 a year at the beginning, maybe $40,000 a year, very low tax rate. And then after 5 years, they build it up and they sell it for $500,000, let's say, which is a lot of money, but not a lot of money. And so what happens to that $500,000 is that instead of saying, well, you're on this low income for the last 5 years, so we should kind of average it out over the last 5 years and just top you up. It all hits in 1 year and suddenly they're a high income earner for that year and they pay 50% tax. It's terrible, right? This is not a high income earner. They got a one-off windfall gain. And so the way the system worked is to say for a variety of reasons, let's discount that down because it's not fair, and it was halved. And now what they're saying is we're going to do this thing that's called indexing. And all we need to know about that, because it's complicated and boring, okay, is the consequence of someone who starts their own business under indexing is they will get no discount on whatever their tax they're paying at their income tax rate. And so that person, instead of paying 25% tax on that $500,000, pays 50% tax. Instead of losing $250,000 out of the $500,000, they lose, so instead of losing $125,000 out of the $500,000, so a quarter of it, they lose $250,000 of it, that's half of it. That $125,000, that is a ton of money to that person. It could be 2 years worth of wages that they earned before tax.
Yeah.
It's just an unfair system that discourages people from taking risks, and like, it's bad for growth and it's not fair for people. And who is starting these businesses? Who's working in the cafe that starts their own cafe? It's not a 50-year-old. It's a 25-year-old. It's, this whole idea, I'm very passionate about this because I think you just got screwed, frankly. Like intergenerational equity, that's the buzzword. They have these buzzwords because they're trying to get votes of people under 35 because that's who shifts the needle in the next election. What intergenerational equity has actually delivered is making it much harder for 25-year-olds today to make money than it was for 25-year-olds 20 years ago.
Yep.
That's the consequence of it.
What are the consequences of the budget on housing then as well? Because it doesn't sound like the consequences are just in the business sector.
Well, I'll tell you how, again, I like to say things in the simplest possible way.
Please.
So,
Jinx.
Someone's 50, they've made money, they own 3 properties. They're using this negative gearing thing to pay for the properties. What does it mean? It means I own this property, I collect $50,000 of rent a year, but it costs me $100,000. What do I do with that $50,000? Oh yeah, I can just reduce my income by $50,000. And this is called regressive because the higher your tax rate, which means the more money you earn, the better that is. Because if I'm on 30% tax and I take $50,000 off, it's going to save me $15,000. But if I'm on 50% tax because I'm richer, that's going to save me $25,000. So it's the government. When I say the government, I mean the taxpayer. It is the taxpayer subsidising people losing money on property investments that are being rented out. That's negative gearing. Now, there are many problems with negative gearing. It distorts the housing system, but that's what it is. And so this person who's 50 with 3 properties, one of the reasons they were able to build their wealth is because the taxpayer funded the losses they were making on those properties whilst the value of the properties rose. Now they say this: if you're that person and you own those 3 properties, the government now says to you, well, you've already got those properties, you've already got negative gearing, we're going to leave you with that benefit. So you keep getting that benefit on those 3 properties. But now you go and buy an investment property because you can't afford a house, can't get into the housing market, but maybe you can buy an investment property. That's a common thing, right, amongst 20s and 30s. And so you go and buy an investment property. Well, since you weren't rich before, you were born too late, we're not going to give you negative gearing on that investment property. Only the rich person, not necessarily rich, lots of like upper middle class people, only that person that owns the existing property. So you as a young person miss out. And what does it do to rentals? It means this. There's 2.3 million rental properties that exist today, investment properties. They're going to keep getting negative gearing until they're sold. No one is selling those. Because the capital gains tax, that means the tax you pay on the profits you make for selling, that's now much less attractive. So not only will I lose the negative gearing and not be able to get it back on the property I buy, because it's now finished, but if I sell it, I'm going to pay way more tax on selling it as well. So it's a disincentive to sell and an incentive to keep. So they're not going to. So that's good news in a sense, because those 2.3 million properties stay on the rental market. But no one is going to buy an investment property today until either property prices go down dramatically or until rents rise dramatically. And the reason is that you can't take the losses you were making on property previously and get the taxpayer to pay for a chunk of it because it's over. And so no one is going to buy investment properties. And so what's going to have to happen is that basically rents are going to have to go up so that people don't lose money on owning rental properties anymore, because it's not that they don't want to, they probably can't afford to hold the rental properties without the taxpayer subsidy. And so I think for a period of time there's going to be lower supply, because the 2.3 mil will still be there. No new ones are coming. Like I can tell you there's no way I would buy an investment property now. And so there's 2.3 mil, there's no new stock. Some of the 2.3 mil will get sold because like people die, they pass it on to their kids, they sell it. And you're going to have supply constraints, no new stock, and a huge drive for people to increase rents so they can offset the ability to hold their investments. It's basically a disaster. The reason I explain it kind of longhand is because lots of people say, oh, it's bad for rent, but that's why it's bad for renters. This is much worse for renters than it is for wealthy property owners who retain the benefit of negative gearing.
By renters, you mean the person that is paying rent?
That's right.
The tenant, yeah.
Who would I rather be today? The 25-year-old in the beginning of their life journey who's still renting but is aspirational for becoming wealthy and owning property and building a startup? Or the 50-year-old who's already built and sold a startup and owned 3 properties? This budget is much, much better for the 50-year-old wealthy person than the 25-year-old aspirational person.
Do you think the Labor government just doesn't actually understand the concept of intergenerational equity?
You know what Jim Chalmers' PhD is in? He calls himself Dr. Chalmers. I mean, you don't want to have a heart attack around that guy. He's not going to be able to do anything for you. So you know what he's a doctor in?
What was his research?
Winning votes, like political science.
Really?
He did his doctorate on how do I win votes. That's his doctorate. He's a doctor of winning votes.
No one would know that if they just look at his name.
Yeah, well, he calls himself doctor. I mean, it's so presumptuous. Anyway, pretentious. So basically, I think that they wanted to do something because what's happening in property in Australia is unfair. Negative gearing is distorting the property market and it's making prices higher than they otherwise would be. It's also keeping rents lower, by the way, because remember, the taxpayer is paying for losses, so you can charge lower rent. So it's keeping rents down, but prices high. So the yield, which is, what percentage of the value of the property am I making every year in rent? That's low because the taxpayer's subsidising. And so that's good for renters, but it's very hard for home buyers. It's not fair. It's a distortion. There are other distortions. Lending in Australia is almost entirely residential property. Banks basically lend money for residential property. They lend huge percentages, like 80% plus they'll lend you of a residential property. The interest rates have been low, which drives up prices because you can afford more, you can pay more of a loan. And there are other distortions like the requirement that first home buyers only have to put 5% deposit up that the government brought in. That also pushed prices up because suddenly people that couldn't really afford property could afford to buy one. And so there are all sorts of distortions, and negative gearing is one of them. And I think they're right to tackle this problem. But the problem is that this government is ideologically driven and fundamentally believes that people who are wealthy should be penalised for being wealthy. The wording they use is capital, that means assets, should be taxed like income, that means wages. it's a good philosophy, and sometimes it's true. A person making $3 million a year just by buying and selling some of their stock portfolio, and they're paying a low tax rate because it's all capital gains. Meanwhile, someone on $50,000 a year is paying higher income tax. That's wrong. But, like all of these blanket ideological statements, it's all unintended consequences. And what I really think is they didn't think this through. I really tell you honestly, I think they're not the smartest. And I think they ignored the advice they were being given. And we end up with a situation where they tried to fix property. They also kind of always have hated wealthy people. And we end up with all of these unintended consequences that will really damage the economy.
So if you are that 25-year-old listening to this podcast right now and you're thinking, oh my goodness, I had plans to invest, I had plans to rent-vest, I had plans to get into the property market, where should you now put your money if you are that 25-year-old person?
That rent-vest is exactly the word I was looking for before. Exactly. I can't afford to buy. I'm just going to buy something to rent out. So you can't do that anymore. That's finito. Like, how are you going to pay for that? Like, you are relying on negative gearing to be able to make those repayments. And so unless you jack the rent of the poor person, that's going to be that's over. And so what do you do? It's a good question. So one thing that wealthier people are going to do probably is buy much more expensive houses to live in, because that is still not taxed at all when you make a profit. So if I go and buy a $5 million house and it rises to $20 million over 30 years, that's tax-free. So that's a great way for rich people to build wealth and then tax-effectively pass it down, and that's how you build an aristocracy in society.
Is that because it's a primary place of residence?
It's your primary residence.
You're exempt from the...
That's right. And there's no cap on the value of the exemption. And so the grandmother who just passed away that bought her property at $25,000 in Vaucluse in Sydney and just passed it down to her two kids, and it is worth $15 million, they sell it, they each get $7.5 million tax-free. The reason I say that creates an aristocracy is the idea of aristocracy is predominantly about inherited wealth. And so we really are creating an aristocracy in Australia, and like a two-speed society of like people that have to work and struggle and people that inherit money and are rich. It's very problematic. They can invest in shares. The problem with investing in shares is young people want to invest in shares that are growth companies, high risk, volatile, but over time go up. Well, the capital gains tax just rose and will not keep pace with a fast growing company. And so that becomes less attractive. But bad companies, when I say bad, I mean boring and not good for young people, Commonwealth Bank. So they pay lots of dividends. That means they make profits. They give you some of the profits, but the share price is not going to go up much. So that's actually very tax effective, but that's a bad investment for young. I mean, it's not investment advice, but like this, generally young people want to pour into growth assets because they can absorb the volatility over time and they grow over time. It's very hard to know what young people should invest in. I suspect this is going to make investing money in traditional asset classes less attractive for young people, and maybe more money is going to be pouring into crypto.
Really?
I think so. And also consumer discretionary spend, i.e. I'm even more screwed than I was the night before this budget. I might as well just go and buy nice expensive stuff and experiences because I'm never going to be able to generate wealth.
And that's what people are doing. That's why we keep traveling, don't we? And why we still live at home at older ages now. Yeah.
And because, there are all these other investment classes that are closed to young people. So I can go and invest in something with a very long and confusing name, but we can summarize it as a shorter and more confusing name with letters called ESVCLP. It basically means a certain kind of investment company that can invest in tech companies, and when you make money on it, you don't have to pay any tax. Now, I can invest in that because I'm what's called a sophisticated investor. Like, I make enough income and have got enough assets for the government to say, oh yeah, your accountant will sign this form, you can invest in that. Sure. But a 25-year-old earning $80,000 a year that doesn't really have assets, they are excluded from investing in a whole lot of these type of investments. And so great, I'll keep getting tax benefits because I'm rich, I get access to invest in things. But 25-year-olds, they're excluded from that as well. It's just a terribly unfair system, and the gap between generational wealth is actually widening, not narrowing.
So is there an argument to be made that as a 25-year-old, the best advice right now would be to, as you said, per your own advice, learn acquire skills, don't stress too much about maxing out your salary at the current juncture. Rent if you have to, and then hopefully in 5 to 10 years' time, there will be some sort of change to the property market that will enable you to get in. Is that kind of what you're saying?
I think so. I don't even think it's that long. I'll say honestly, there's an election in 2 years. I think 2 years is about the time where rents will be very high. Inflation is 5% this year. This is very high. The target is 2 to 3%. And so that means on average prices are going up by 5%, but we know prices of lots of stuff are going up by 10 or 15%. So in 2 years' time, prices will be crazy high. Interest rates probably will be up, I'm guessing. All this rent hell will have kicked in, so it'll be hard to find a rental and it will be expensive. And I think Australia's a fairly decent chance of being in a recession, i.e. the economy will have gone backwards for 2 quarters in a row. It's barely going forwards now. This will slow it down further, and that's election time. So that's bad timing for this government. And I also think, I feel very strongly about this. If you are a 25 or 30-year-old today, and you vote for this government at the next election, then what you're saying, forget policies, and I'm certainly not telling people to vote for the Liberal Party. I am telling them not to vote for One Nation. I'm not a fan of them, or the Greens, even worse. But if you vote for this government, what you're saying is this, because I'm sure you guys are aware of this. I don't know if your listeners are. Albo was asked so many times whether he was changing property taxes and capital gains tax if he got elected. Because Bill Shorten, the last guy for Labor, he said he was going to change it and he got crushed because of it. And so they asked Albo so many times when he was running for Prime Minister, and he literally said something like, I've told you 50 times, stop asking me. There will be no changes to property taxes or capital gains tax. Obviously, they were always planning it. They've now done it. If people vote for this government at the next election, what they're effectively saying is, we are going to provide an incentive for politicians to lie to us about the most important things when they want to be elected, because the guy that didn't lie, we voted against him and crushed him in an unlosable election against Scott Morrison, which, by the way, was not a great outcome for Australia either. But he was crushed. But when I lied about it and just did it afterwards, you all voted for me, and you even voted for me again. And so if people vote for this government again, I think it really provides an enormous inducement for a complete lack of integrity in politics at a time when we already have big integrity issues with politics.
So for housing affordability, Jeremy and I don't have PhDs in economics or finance, but something I think about quite a lot is how do we actually increase the affordability and have housing prices at a rate that is accessible for people our age to actually buy those properties? What kind of levers need to be shifted in order for A, affordability to become more accessible, and B, for general accessibility and supply to also meet demand?
I think that's the most important question, and people always like to say it's complicated, etc., and at least they're having a go, but this is not a good go, right? It's a dumb go. And so it is a bit complicated, but it's not that complicated. So there is something called supply and demand. It's like economics 101. I don't have a degree in economics, thank God. And so, but it basically means if there's not enough of something and lots of people want it, the prices go up. And if there's lots more of something than people want, then the prices go down. And so one thing definitely is build more housing in places where people want to live. And now we talk about obstacles to these things. People that bought a house that has a certain value because there are no apartments around that house do not want apartments around that house. And so they go and fight councils and then the state authorities to try to prevent rezoning that lets apartments be built. So that can be called NIMBY. People know NIMBY, right? Not in my backyard. And so that's the NIMBY movement that stops those getting built. Along with, there's a whole lot of red tape and it's pretty expensive to build, but you could deal with that. You just have to rezone lots of stuff. Now, I don't want my next door rezoned into apartments either. I get it. I want it in your backyard. But if we're going to do this, it has to be somewhere. And in Sydney, in a suburb called Woollahra, it's a very beautiful suburb, they just did a rezoning for apartments, and I think they're bringing a train line back. And the people that live there do not want it. But the thing is this: if you want to live in a country town, then move to a country town. But you can't keep the middle of a growing city feeling like a country town. It's a very unpopular view. But it is the truth. We have to decide, do we want growing cities or live in a country town. Can't have both. And so one is housing supply. You have to make tough decisions, and some people will hate you. Labor could make these tough decisions because no one in Woollahra votes for Labor. They all vote for the Liberal Party, maybe One Nation, the Teals. That's who they're voting for. They could have done that. They didn't do it. The other thing is this. The main reason prices go up is because people can afford to pay more. And so here's ways that people can't pay more. They can lose their jobs. That's bad. We don't want to do that. That's in a recession. Everyone has jobs now pretty much. So that's one reason people can pay. Another reason is interest rates. So when interest rates are low, prices go up. Interest rates are rising. That's why price growth has been contained and has gone backwards. People are worried about mortgage repayments. There's a third thing that we don't talk about much, which is mostly people don't pay for their houses. Mostly the bank pays for the house and you pay back the bank. And people borrow big amounts of money from the bank, and we could just lift the requirements that banks have to have. And people say, well, don't distort markets, let markets run. We always distort markets. There's all sorts of rules on lending with banks because we don't want them to go broke for a start. And so we could just say the bar for lending is much higher. It is much harder to borrow money. And therefore, if people can't borrow as much, they don't have as much to pay, and the prices will go down and it will be more affordable. So they're some of the ways. But ultimately, the bottom line is this. If you have immigration and more people are coming in, and you have more people living by themselves, there's 24% more single person dwellings today than 20 years ago.
Wow.
So way more people are living by themselves. That's more properties. Then you're going to need more houses. Immigration, population growth, more people in one-person dwellings. You need more houses. There is no way to solve this problem without a ton more houses. But houses are expensive because they're on land. So really we mean a ton more apartments. And then people say, we don't want Melbourne and Sydney and Brisbane to turn into Hong Kong with Singapore with towers. Okay, stop growing them. Stop growing them and you won't have that problem. But you've got to decide, because everybody in Australia clusters into a very small amount of space relative to, say, the US. And if we're going to do that and keep growing the population, and young people are not going to rent, which maybe they should rent, but if they're not going to rent, then you're going to need to have apartments. That's the bottom line.
Adir, you need to sell us some optimism as a 25-year-old to 30-year-old. A lot of this seems, stressful for us. We want to get out of home. We want to do these things. We want to be more independent. Sell us some optimism. What should we do now moving forward in the next 5 years? You did mention that we might have a change of government, or we would hope to maybe have a change of government rather. But what should we do right now in the next few years? Well,
that's a good question. I mean, you say we might have a change of government, but what can we do? There's this saying, I'm going to get it wrong, but it's something like, Lord, give me the strength to change the things I can, the serenity to accept the things I can't, and the wisdom to know the difference. That's one of my favourite sayings I've ever heard. I think government is we can't really do anything. Like, we can do it in 2 years. Your vote probably doesn't count anyway.
Right. No.
Right? So, but let's think about the things that we can change.
Yeah.
This is going to sound, a bit spiritual, but one of it is attitude. It's what's between your ears. And so 2,000 years ago, they were sacrificing kids and virgins. Today, we're not doing that. We would think that was terrible. The world is a lot better than it was 2,000 years ago or 200 years ago, or, it's not World War II and the Holocaust. The Russia-Ukraine thing's pretty terrible. The Israel stuff is terrible. But, it's not everybody having a free-for-all and killing everyone and raping everyone they ever met. And so the world is good. We're in a good place, even in these times that are not as good as the 90s, okay? The world is a good place, and you're young. So when you're young, the world is your oyster because you have time and you have energy. Mm-hmm. You don't have wisdom, but I'll swap them. I'm happy to give up my wisdom and be young again, okay? It's the best thing to be. And so every day you wake up and you say, thank God, or whoever you want to thank, that I'm young, because that is a great thing to be. And then you say, what can I do with my time and energy and lack of obligations probably to make things better for myself? And that is why I say, go and work hard, because if you work hard, luck starts coming your way. And have a very positive attitude, because if you have a positive attitude, more good things happen than if you have a negative attitude. Why? I don't know, but it does. It's a fact.
I want to ask you about that luck component, because I'm a massive believer of creating your own luck. Has there been any instances in your own life where you worked really, really hard at something and you found that there was a luck that was actively accrued from your hard work?
Well, I think that's everything that's gone well for me. I don't think anything has gone well that didn't have a big element of luck. I don't think anything's gone badly that didn't have a big element of luck. I think the single biggest determinant of everything is just be lucky. I always say, like, this is my three rules for life. But the number one is, like, be lucky. That's rule number one. Be lucky. If you can be anything, be lucky. Number two, don't get caught. That's also a very important rule, by the way. And number three, be more valuable alive than dead. That's three good rules. But number one, be lucky. That's the most important thing. And I'm not being flippant and saying just be positive in a world that's crumbling around you. But the thing is this. A 25-year-old today earns much more money in real terms than a 25-year-old 20 years ago and has a better standard of living. Now, property is the big exception to that, okay? But the standard of living is much higher because I look at what people own and what they do at 25. When I was 25, it was much worse. Like, it was harder. Like, the country was poorer, life was harder. And so it is objectively better.
Can you give an example of that?
Like, the amount that people earn and what they can buy with it, that's why I say put housing to the side. Sure. That's the disaster, okay? Sure. But we accept that. That's a disaster. What they can buy, the amount they earn and what they can buy with it is much better than what I could buy with it at the same age. Like, I wouldn't have even, if I was working in a, if I was the third year working in a corporate job when I was 25 or 27, I would not have been able to afford to pay the lease on a nice car. Now, I'm not saying you should do that, but just as an example, I didn't really have the choice. I just wouldn't have been able to afford to do it. And so the amount of money that young people are earning is higher. It gives them more buying power than what was available previously. And part of that is prices have gone up in the last 5 years, but real prices have come down, like Amazon and globalization with offshoring of manufacturing. Like, prices really have come down on stuff. Also, again, I'm not saying this is a good thing, but like, if I just didn't want to cook food when I was 25, I could get like Macca's or pizza delivered, maybe. Macca's not delivered. And that was like it. I know I'm saying like I'm not very old. And so, but now, like, you got Uber Eats, you got, like, I'm not saying that's like all bad use of money, maybe, but like, the world is a much easier, more convenient place to live in. Now, social media makes it harder, but generally speaking, quality of life, objectively speaking, has increased over the last 20 years. Happiness has not increased. Happiness in the Western world, excluding Israel actually, has diminished, but that's that's between your ears issues, okay? But on an objective basis, quality of life has increased. And the reason I say a lot of what you should do is work hard and find ways to be grateful and happy between your own ears is because objectively the data supports that. And I think that the combination of the constant flow of doom scrolling, social media, these negative narratives, the fact that you can't buy a house, which definitely sucks and makes life feel more insecure and a bit hopeless, that really brings people down. But the objective, there's a book called Factfulness. That's a good book. It basically has got lots of data and is semi-readable on how objectively the world is just so much better today than it was in previous generations. Like, you're not in the Holocaust. My parents were in the Holocaust. Like, you're not fighting World War II. You're not fighting the Vietnam War. Like, things are objectively better and safer. And I think a lot of happiness is saying there's an outside world that goes on and I don't have a lot of control over that. And some of it sucks. But some of it's very good. Like, my parents are alive, I've got 2 lovely kids. A lot of my life is great. Every morning I wake up and I'm like, I'm very lucky to have that. And so, yeah, things go wrong all the time, but I definitely think that having the right attitude towards yourself and towards the world makes everything more fun and somehow does lead to good things. And I think the bad times get better and the good times get worse. Nobody realised how good this capital gains tax time was until last night. And it's like, oh my God, they were the good times. But, before 1987, there was no capital gains tax in Australia. So from 1987 to 2026, people complained about capital gains tax. Oh, they brought capital gains tax in. And then after 2026, now people are like, oh my God, if only it was the old days of yesterday. So I think it's just try and be in the moment and be happy for what you've got and know that, this book, Kohelet, it's a Jewish book.
Can't say I have.
It's a Tanakh book, okay? I'm not very religious, but I did read this book with my best mate. And that's where they say, like, to everything there's a season, a time for, a time for. And it's also where they say there's nothing new under the sun. And it's also where it says this too shall pass. And that is like the most important takeaway, I think, in tough times. This will pass. Stay positive. Like, things will get better.
And like you mentioned, their attitude, it is rare to come by that in nowadays. I find, at least. I mean, Ilan and I both work in healthcare. You did previously too. It seems very doom and gloom. It's rare to come across people that are vibrant, are enthusiastic, are happy. And if you can be that person, like you said, you're probably more likely to create your own luck. With that, though, you also mentioned the component of working hard. That can be described on many levels. What do you define as working hard?
So you know what the average time is that people wake up in the morning in this country?
You spoke about it on the last episode. I'm trying to remember. It was like 7?
6:30 in the morning. I find that disgusting. I would not wake up at 6:30. Although I have to wake up in the early 7s to take my daughter to school. But that is very early for me. My main complaint is I want to get a coffee at 3 p.m. and all the cafes are closed because they're all open at 7 in the morning. But that is impressive. 6:30 in the morning. And so what I mean is, like, this is going to... I don't mean this to sound like motherhood statements, but this is what really works. So, have consistency of when you go to bed and when you wake up. Try and wake up early because, the morning... I'm hypocritical in what I'm about to say, but, like, the morning... Dawn is a time of hope. But dusk, that's kind of a time of being a bit depressed, right? It's an ending. And so waking up at dawn is very motivating, waking up early. Getting 8 hours, 7-8 hours sleep, very important for mental health. And then just think to yourself, what can I do to take advantage of time? And sometimes the answer is read a book or chill out or whatever. The answer is almost never scroll Insta. That's not going to make you happy. That stuff is addictive, right? Like I stay off that. If I go to YouTube Shorts or Insta and I look up and it's like 1 hour, that's me. 1 hour. I hate this stuff. Yeah. So I don't go near that stuff. But I think one is like get into that whole attitude of this is how I'm going to live my life. Go and do exercise. Exercise is very important. Good for neurotransmitters in your brain. So do exercise. I would say eat healthy. I love sweets. But like I try to eat healthier, and so I definitely do a lot of exercise. I love sport. And then I would say find something and pick one thing and say, for this amount of time, I'm going to go all in on this thing and really try and nail it. It might be a work thing if you do a startup or a side hustle, whatever it is. I might be learning something and just go all in on it and just be very passionate about really improving steeply up the curve. And I think, but pick something you love so that when you don't have to say, oh, I can't be bothered doing this. It's like, I want to do this.
Yes.
That's how I feel about things.
On that as well, I think loving what you do also comes downstream from working hard on it as well. Because I'm like, when I picked to become a psych, I don't know if it's the same for you when you picked to become a physio, but my love for what I do only increased when I put the hours in to become obsessed. Like that's what I mean. Like, and maybe that's where the getting lucky component comes in, because I worked hard at it and I invested a lot of time into it. But that's when I personally felt the most obsessed with the work that I do. So I totally agree with that sentiment.
I'll tell you one story on that. So people, it's hard to keep going when you try hard and things don't happen for you. So I'll tell you this story. There was a guy, I don't know, it was an English soccer player. I don't really follow sport that much, which is kind of ironic. But like, I think it's one of, I don't know who it was. It was an English striker playing soccer. And like he scored a goal, and it was like this goal. He was just in the right place at the right time. And a commentator said to him after the game, you must be feeling pretty great about that. You were in just the right place at the right time. Very lucky to score that goal. And he said, true, but you didn't say anything about the other 15 times that I did the same run in that match and the ball didn't come, but he kept running the 16th time, and the 16th time is when it came. And I think that's one of the hardest things is the winner is generally the person who persists for the longest. That's my experience in life. It's not the most capable, it's not the most talented, it's not the fastest, it's just the person that persists. It's not new. No, I said Kohelet, there's nothing new under the sun. That's the tortoise and the hare story, right? That's the answer to life.
So, Adir, I'm glad you mentioned you have a sweet tooth, because we do have some lovely muffins.
I noticed that I'm resisting because I need to fit into pants.
Well,
I just did gym, and so I look at that and I'm like, 1/3 of that muffin is probably in the entire calorie base that I just burnt off.
Potentially, but it is listen, we'll be very offended, especially
Is
Jeremy's
it a
mum.
requirement? Oh my God.
It is a requirement,
All right.
but we
I'm
don't.
gonna do it.
It's
No, I'm
home,
gonna.
but-
They look delicious.
But there is a condition.
All right, what's that?
We have a segment on the show called the Sweet Spot question, and it's a question we ask all our guests. It's a closing tradition, and what we like to ask our guests at the very end is, what is one moment that you can reflect on in the last 6 months to 12 months that gives you a feeling of, butterflies in the stomach? It's a sweet sentiment moment. Perhaps it was something in your personal life, something professionally that you look back on even now and think, gee, that was a good memory.
That is a great question. It's honestly hard for me to pick one of those. I think that's what I say about my kind of view of the world. I think this is the answer for me. My son spent a gap year in Israel last year. People thought I was slightly crazy to encourage him to spend a gap year. It was very amazing for him, and I'm very, very close with my son and daughter. And I think I use Find My iPhone to be a helicopter parent and be overprotective of my kids. Let's just get that out there. And so they're supportive of it. They understand my issues. And so at the end of the program, he actually got appendicitis and had to get raced to an emergency appendectomy in Jerusalem. And it went all right. And then at the end of that, he came back, and there was this moment where he was back in my house, and my daughter was there, and I was there, and it is such a mundane, quotidian moment in life, but I just felt like after 1 year of just being stressed, and I went to Israel 5 times last year. That's how stressed I was. This overprotective parent. I told you, you were skeptical, but there you go. Delivers the goods. And so basically they were after a year of just being worried, I just had them both back, and I felt like it was in the right place, and I just felt like if I could pause, if I could freeze time now, if this was my Groundhog Day, that movie Groundhog Day, if this was my Groundhog Day, I'd be okay with that. I'd be okay with just going through that.
Sweet.
So that's is that sweet enough for the cupcake?
That's more than sweet enough.
Anyone tells you they're allergic to cupcakes or not?
No.
I
mean, we
hope
asked
not.
that question, but
No
so
EpiPen
far,
or something here?
I've got EpiPens. I've got my
EpiPen.
He's allergic.
So you're in safe hands. On that note, Adir, thank you so much for giving us your time and joining us on the Big Bros podcast. It's been an absolute pleasure. Where can people best find you and your podcast?
Well, I don't know. Presumably on every podcast platform. It's called The Contrarians with Adam and Adir, because he gets his name first because of one letter. And also because Adam is just one letter ahead of Adir alphabetically. Right. Although he does all the work, I should say. So that possibly was part of the reason. So they can find The Contrarians with Adam and Adir. When people say it's on all good podcast platforms, I presume that's true. It's probably on bad podcast platforms as well, if I'm honest. So find it on all good or bad podcast platforms, or those in the middle.